it's clear, Tyler, that there is definitely some euphoria in the markets right now. And thinking about S&P 500 up double digits in a year where there's a pandemic. But when you look at those returns, what you'll find is that they're concentrated very, very heavily in just a couple of companies. 80% of the S&P 500 return this year is attributed just to the top 10 companies in the market. So there is an enormous amount of companies out there that have been left behind by this recovery, and there is probably ample room for there to continue to rally into 2021 as the economy starts to open up. The biggest impact of this year and the biggest stimulus of all was vaccines starting to get into our essential workers, and that's going to give markets a shot in the arm throughout 2021. The head of the vaccination program for the U.S. government thinks that close to 80% of the population may be vaccinated by next summer. That brings us right in stepping stone of herd immunity. When you think about the stimulus coming, likely to come in hopefully before Christmas to bridge us over through this dark winter, and then monetary policy likely to continue to flow throughout 2021, that provides a great environment to these companies that have been left behind outside of those top 10, where there has been some euphoria.
Well, anyhow, I'm going to come back to you on the IPO question in just a moment, Mike, and let's hope that the government is correct and we can get 80% of the population vaccinated. It's going to be a huge logistical lift, as well as a very strong sense of salesmanship here, because there are a lot of people who are just afraid to take it. Craig, let me go back to the question I began with, and that is specifically on IPOs. I take Mike's point that most of the gains in the S&P 500 have been concentrated in 10 stocks or so, but specifically on IPOs that have come out at high prices and then they've doubled or they've gone way up. Are you worried that there is too much euphoria there, and that this reminds you potentially of the year 2000, when lots of people who got in got burned?
Yeah, Tyler, it smacks of 2000, partly because it's in these tech names and these new startups. If we look at this year, we've had 30 IPOs of $1 billion or more. You'd have to go back to 2014 to find a year that was even anywhere near that strong. Remember, 2014 was a pretty good year for the markets, and we tacked on several more good years after that. So I don't think it's a harbinger of larger doom for the markets, but it does point to what I think you guys have highlighted, which is its pockets of euphoria. You can look at mega cap tech. You can look at certain areas of growth stocks. You can look at some of these internet names. There have been Roblox. I know that's one of your favorites, Tyler. I've witnessed my daughter play it. I still don't understand it, but that speaks to this idea that there's such a search for growth, and there's a huge amount of liquidity in the market, and it's funneling its way into IPOs. I would just say it's a very small sliver of euphoria in what I would call a complacent market. So I don't think this signals something broader like it did in 2000, but it's certainly worth paying attention to, because at some stage you reach heights that can't be maintained in these areas.
Shepard Smith here. Thanks for watching CNBC on YouTube.